Welcome to Smart Money, brought to you by Daily Investor, South Africa's fastest growing investment publication. I'm Alishia Seckam, and joining me today is Johan van Zyl, co-CEO of African Rainbow Capital. Now, follow this career path, which started in 1983. Economist for the government, agricultural economics lecturer, World Bank coordinator of rural development, and a couple years after that, a return to university life, but to become the youngest ever vice chancellor and principal of the University of Pretoria. Flash forward to 2001, the man gets down to business, joining the corporate arena as CEO of short-term insurance company Sanlam, to just 2 years later head up Sanlam as its CEO. After leaving the role in 2015, he assumed the CEO position at Ubuntu Investments and became co-CEO of African Rainbow Capital, which roughly 7 years later has many prominent businesses in its stable: Rain, Time Bank, Crops Group, Afrimat, Alexander Forbes, A2X, Valdevi, and Sanlam as well. Johan, thanks so much for squeezing us into what is a very busy diary, I'm sure. And I'm going to stick to a timeline theme through this interview. Before we get to ARC, let's go back 20 years to when you made the transition from the world of academics to that of business. How do you go from being named UP's agriculturalist of the century to not only entering the corporate arena, but being named CEO of a short-term insurance company?
Well, I've always had a sort of a passion for business, and although I was an academic for a while, got heavily involved in business, sat on boards. Even while I was at university still, got involved with Sanlam. I was on APSA's board, got involved with the World Bank and quite a few other things. So always sort of an eclectic business, and even as I think as an academic, maybe a bit of an academic entrepreneur. I did some business with the university as well. That's before I became vice chancellor, if people want to ask. But so business all been a major part of.
Okay, so you may have not needed a lot of convincing, right? But it was certainly a pivot point for you. Was it a hard transition to make?
No, I think in the end it wasn't as hard as I thought it would be. I used to, the big it's not all different. Academics talk a lot about business; they don't do it, and eventually you get tired of talking. You have to also try out a few of the things that you've been speaking about, and so it's actually a natural progression. And most people don't do that or don't have the opportunity to do that. I was fortunate enough to be able to, to have a sort of a very interesting career. And even now, later on in my retirement, quite nice things to do.
Look, a lot's changed in 20 years, right? But is there anything you miss about the world of academia that you just don't find in the business world? Are there major differences to take note of?
Oh, yes, there are many differences. I mean, both have issues. I mean, macroeconomic issues. Academia think they tend to be isolated from that, but they're not. They're funded by the state. They how much money gets into the fiscus and those kinds of things actually determine to a very large extent the state of our universities and so forth. But if anything, I think the university sector has had much more progress and transformation. And I'm not saying just from being a non-democratic to a democratic society, that as well. But in particular, the technology that has become available. Today, you can get the best professors' speech and lectures on, digitally, and you can listen to that. The competitive landscape has certainly changed massively for academia. And it sort of prepared us, The other thing that, is not common in business is people are not always good administrators. They're good decision makers, but they don't write it up and so forth. And then, coming from an academic background, you've had that sort of grounding, administrative sort of a grounding. So I often say, you think you manage a university, you actually administer it to a large extent. So, and a business, you have to make your own waves. In academia, it's being made for you. You have this repetitive nature of every year. You get a first-year student, they graduate, they go on, and so forth. In business, if you stop paddling the boat, there's no momentum. It simply stops.
Well, you've certainly been making your own waves, right? Because your next move saw you entrench yourself even further. You left Sanlam, with a well-established, good track record in 2015 to run the then newly established African Rainbow Capital. Why? What was the appeal there?
Well, I turned 60, firstly, and you have to make this very important decision what to do with the rest of your life. I mean, you constantly have to do that, but it's this thing, it's sort of a benchmark. And so I decided to go into some family businesses and do a few small things and so forth. And then Patrice Motsepe came to me and said, Johan, we've been partners here in Sanlam. They were our PE partners, Ubuntu Investments. And we've had a very good working relationship. The business has done well. Why don't you take the stake and see what you can do with it? And instead of just having a passive investment in Sanlam, we're willing to borrow a bit. You know a lot of people through your career. Let's see how much money we can raise from them. Start with a new business called African Rainbow Capital. We borrowed 5 billion and we got 5 billion from the market. Sort of a 10 billion war chest to start off a new venture where we would take active stakes, sort of 20 to 35, now and then about 50%, into businesses that is much more about the future. And the challenge was really, Patrice, having been in mining, I coming from a financial services and insurance background, over 100 years, old business, well established and so forth. But with all the change in the world, and I've navigated a little bit of that in the past and that we spoke about, but why don't you take and create a third business for us on top of these mining and financials and our stake in Sanlam, and do something that is much more forward-looking? Look at the cloud, look at communications, look at, digital banking, find opportunities that are there, mainly in South Africa, because we're from here and so, but also, branching out and see whether you can't make a difference, sort of create something of scale. And that, to me, was the real challenge. I mean, in order to succeed, you have to be world-class, you have to do well, but we wanted to use those principles to also do good in our country. Give people access to the financial system, much cheaper than, what you can do through bricks and mortar and, use the technology that is available. Similarly in communications. For South Africa to succeed, you need data and, cheap data, not entrenched. And with the spectrum becoming available, or at that time, when we started, people talking about an auction and so, very clearly setting ourselves up to participate in part of that new drive, and food security, and pensions and things like that, where you need scale in technology and things to work. And if you look at our portfolio, I mean, people say disparate and so forth, but there's this golden thread through it. You have to have scale. It is really, you have to use technology, and all of what we do makes difference to millions of people in our country.
And you had strong conviction there, Johan, because 5 to 6 years after that, 2015 start point, people were referring to your incredible 185 million rand bet when you bought African Rainbow Capital ordinary shares at R2.75 a share. No doubt, though, it was a very calculated bet, right?
Yeah, of course, it's easier when you have to invest in your own business, and you sort of, we have a great team and youngsters, and so we have to rein them in all the time. The old guys here, myself, and I have a few colleagues that left Sanlam that I've worked with, some that we've encountered along the way from other financial institutions that joined the team. we're a small team, but we've built a great portfolio, of which part is listed, about 13 billion rands at NAV. It's trading at a discount still, which is we're working towards narrowing quite a bit, but it is new. It is taking a bit of a punt and a free option. And some other businesses that we've kept outside of the listing, mainly financials. We're partnering for others and other investors, some bigger players and so forth. But we've built without 10 billion in 7 years, where the rest of the market didn't do too well. We now have we're just compiling the numbers. We're well over 20 billion rands of value now, really, that we've put together. So it's been a fantastic, sort of an application at the end of your career, a bit of an academic, a bit of a big business, a bit bureaucratic maybe, and so forth, towards a much more entrepreneurial small business, really taking opportunities and putting together a portfolio that tries to make a difference.
Look, that growth is evident, and that share price alone is up, about 11% this year, at the risk, Johan, of giving you an opportunity to talk your share price up even further. What's your outlook for ARC in the current economic climate? Because startups and slow to no growth environments aren't traditionally a good fit.
No, that's true. That's true. So it is a longer term sort of investment holding business. And when you start up with the startup, we've taken on a new stock exchange. Many of these things are things that worried us. Not that we weren't good, in banking we were excellent. In our stock exchange was when we started A2X and so forth. The JSE was number one rated in the world in terms of raising capital and a whole range of things. So it's tough to take them on. But all of these institutions had one thing in common. They were fairly exclusive to the top end of the market, and they were fairly expensive. And this is where technology and scale allows you, if you do those things and you get it right, to bring in a big additional component of our population, make it cheaper, and even make it better in the sense that you don't have to go to the bank. We bring the bank to you, where you do your shopping, where you do your normal stuff. The bank is rightly integrated in your daily life. And the touch points are so much more and so forth. And that's where the idea of Time Bank, RAIN, using the spectrum, really trying to break down the duopoly that we've effectively had in the country with respect to data. And the issue is it is expensive in South Africa. You can see since we've been active, all the prices came down. Many people are following us on the no-cost transactional bank accounts. So those things are all sort of having wider impacts that we foresaw, but not as much as what is actually happening.
Yeah. So you may use these opportunities to talk that share price up, but as I alluded to at the start, I mean, you've also put your money where your mouth is, and yet, like you said, the market never seems quite as advanced. So let's get specific here. Where do you see most of ARC's growth coming from in the short and medium term, and do you think that's going to be enough to work to shrink what has been a very persistent discount to NAV? I mean, what's going to close that discount?
Okay, I think the one major step that we took towards the end of last year was to really adjust our cost base. When you start out and you only have a few investments and so, of course, you have to carry a whole lot of staff and things into the future. You don't really know whether what would work and what wouldn't work and so forth. So you try out a few things. You have to come with a cost base that regardless of what you have, it covers you. Yeah. And generally, the sort of private equity cost base is the one that we've used. It's a fairly expensive one. You take around 2% of the NAV, and that is what you get per annum. But, that was pretty high. It turned out that, now that we're up to scale, and we're, as I've said, around 20 billion rands of assets that we manage, it is substantially cheaper in reality than the 2%. So we effectively run at 0.7% now. So we've adjusted that downwards. We've also upped the level from which we participate in, the outperformance and the private equity principles. So the cost has come down, if you look at it over a 5-year period, moving forward, from a fairly hefty fee-based thing, particularly if your share price is also trading at a discount, to where we are now extremely competitive with any other sort of an asset manager.
Yeah,
And
look,
that is really, I think, an underpin. Well, we're a holding company, and most holding companies now trade at some sort of a discount. We've tried to limit it, and you would have seen the discount really closing since we've done that.
yeah, and what you say, it needs to be emphasized, right? Because you're making investments in early startups, and it takes time to build a track record to demonstrate this ability to unlock value for shareholders. Johan, what next as far as capital allocation goes? What are you pumping more capital into, and where are you possibly taking money off the table?
So we're pumping a lot more money into Time Bank. Not in South Africa as much. I think we're now on a break-even path. We have well over 6 million clients now. We have to scale now. But the difficulty is, like I've just alluded, is when we had 100 clients, we had as many people working in Time Bank as now with 7 million. It is totally scalable being a digital bank. But unfortunately, even when you're small, you need people. So it's this cost issue. We're now in scale. We think we have a wonderful base from which to move forward and provide a whole range of South Africans who've been excluded in the past or are unhappy with the fee basis, and so of our big banks to come to us to get a different kind of a service. So that works well. And we're particularly good at having high volume of transactions that are relatively low value, which is completely the other way around with the existing banks. They have fewer transactions with mainly rich people of high value so that they can deliver specific services. The digital bank is on the other side of the spectrum. So that works well. Rain is doing very well for us. That is moving forward. We'll be putting more money in. We've started with our 5G network now. Of course, we have the electricity issues and so forth that makes accessibility difficult, but we're working on ways around that. So overall, that is going well. We're big in phosphate and fertilizer. That seems to be, after a tough start, seems to be a winning bet. So that is working very well. It is our third biggest business. We're big into pensions. Alexander Forbes. It's the one way that people are saving in this country. So overall, through their pensions, overall, those are we see as growth. And then, combining with Sanlam on a few things. Yeah. We've exited Afrimat. That's been wonderfully well with us. We've exited our coal ventures and mining into that. And we've exited some of our startup businesses to international players that simply paid us enough to make up for the fact that we don't have to hold the business for 10 years to make that money.
Johan,
so very exciting.
Yeah, we're going to have to wrap this conversation up. But before I do, no mention of you venturing into new sectors, right? Has that got anything to do with the headlines that have been doing the rounds? Business investment in South Africa is on strike until things improve.
No, not in fact. It's not the reason at all. I mean, as we loosen up and get out of existing businesses, and towards the end of last year, we sold a few businesses where we netted well over R1 billion. A big chunk of that will go towards supporting our winners, as we call them, a bit more, Time Bank, Rain, and others. And then Alexander Forbes and so forth. But quite a few of those, quite a lot of that money will go into exploring the next wave of things. I don't want to give it away, but we see in this kind of environment, we see really, really exciting things. Yeah, when everybody gets the wind from behind, everybody is sailing fast and that sort of a thing. Prices are through the roof. Now, you see good companies who survive. A whole lot of businesses have fallen over, and they say it's because of COVID, and so it's mainly because of bad management, not foreseeing things, not following risk practices. And the gems that you see now surviving and that are ready for investment, we firmly believe in. We're a believer in opportunities and people, and particularly good management. So that's really who we support. We have great people in our business, and when we invest in these other managements, we firmly believe it's not about the business they're in so much as their ability to make things work.
Johan,
If you
any
think
good
about
journalist loves a slip of the tongue, but let me let you go before that happens on your end. Thanks so much for your time, and thanks for joining us on Smart Money.
Thank you, Alishia. Thank you.